Welcome back. The Strategic Bitcoin Reserve has now been signed as an executive order in the United States by President Trump, but there's a lot of disappointment, I guess you could call it, in the crypto overall ecosystem. And we're going to be discussing that today, including JPMorgan stating no Cardano and no XRP. We're also going to kind of take a look at the World Liberty Finance holdings to see what their portfolio looks like, and also some news about Bitcoin, Ethereum, and Maple, as well as Sui Protocol and Aptos. So stick around and don't forget to give this video a thumbs up, hit the subscribe button, that way you never miss a new video right here on the channel. Let's get into it. So David Sachs, who is the first crypto AI czar for the United States, wrote, just a few minutes ago, President Trump signed an executive order to establish a strategic Bitcoin reserve. The reserve will be capitalized with Bitcoin owned by the federal government that was forfeited as part of criminal or civil asset forfeiture proceedings. This means it will not cost taxpayers a dime. It is estimated the U.S. government owns about 200,000 Bitcoin. However, there's been no complete audit. This executive order directs a full accounting of the federal government's digital asset holdings. Now, as many of you know, there's been a lot of conversation in the news about whether the government is going to sell their Bitcoin or not sell their Bitcoin. They may not even know where it is. Anyway, the U.S. will not sell any Bitcoin deposited into this reserve. It will be kept as a store of value. According to David Sachs, he says the reserve is like a digital Fort Knox for the crypto, often called digital gold. David continues saying premature sales of Bitcoin have already cost U.S. taxpayers over $17 billion in lost value. Now the federal government will have a strategy to maximize the value of its holdings. The Secretaries of the Treasury and Commerce are authorized to develop budget-neutral strategies for acquiring additional Bitcoin, provided those strategies have no incremental cost on American taxpayers. This is very interesting because the Treasury can do things that don't necessarily cost taxpayers anything directly, like issuing bonds to the Federal Reserve to get the cash to then go buy Bitcoin. Maybe this is potentially what they're going to do. We saw during the previous administration with Secretary Janet Yellen that they were doing things kind of across the board that were unprecedented, right? And so there could potentially be that situation here with Bitcoin and the Treasury. In terms of the Secretary of Commerce, I don't know. I really don't know what that would look like specifically. But anyway, he said, in addition, the executive order establishes a digital asset stockpile consisting of digital assets other than Bitcoin forfeited in these proceedings. The government will not acquire additional assets for the stockpile beyond those obtained through forfeiture proceedings. Now, this specifically, I would imagine, is talking about the digital asset stockpile, not the Bitcoin reserve. And so this kind of goes in, like, is this actually a reserve if they're only using forfeited crypto, right? What other reason would you hold the coin or do anything with it? Or the thing is, the traders in the market were very disappointed. Remember, the market was pricing in that Trump was going to sign a strategic reserve and that there would be Bitcoin buying. And so the fact that we don't have any conversation about actually buying of Bitcoin or any crypto for that matter, this kind of changes the story. And so the market has kind of readjusted, not by significant means, right? We haven't seen major moves to one side or the other in the market, but there's definitely risk here. And David Sachs continues saying the purpose of the stockpile is responsible for the stewardship of the government's digital assets under the Treasury Department. Promises made, promises kept. President promised to create a strategic Bitcoin reserve and a digital asset stockpile. Those promises have been kept. And so listen, this is the first step. So obviously it may not look like how many people wanted it to look, with a lot of buying and, buy this coin, buy Cardano, buy XRP, buy Solana. Meanwhile, they're not doing any of that. And again, this is probably going to be more of a congressional standpoint, but it seems like the one side is still very against crypto, which I'm like, have they learned nothing from last year? Like most crypto people who like lived in New York or California or Seattle or Florida, a very progressive kind of other side-minded view than what the current administration is. And because Trump was so pro crypto. I think that a lot of those people had no choice but to switch their potential vote. And I don't know why crypto is a political thing. Like it should be looking like everybody should be looking at it like the banks are taking advantage of very poor people by giving them credit cards at 30-40% interest rates, by charging them fees because they don't have the minimum in their account, charging them overdraft fees. Why are you even approving a transaction if they don't have the money in their account? Like all these kind of situations. And they're just like, crypto bad, keep them in the banks. And it's like, what? What? Anyway, so I actually think that this is pro crypto because it's kind of, again, from a very high level, putting that crypto is going to be a big part of the global economy and especially the digital economy. And remember, just a month ago, White House crypto czar David Sachs says the first priority is stablecoin legislation. So we know this and we have known this. Like Congress is not thinking about a strategic Bitcoin reserve, not cryptos. They're not thinking about Solana. They're not thinking about Cardano or XRP. They are literally thinking about stablecoins because they believe this is the risk because it's backed by a dollar and they want to make sure that that dollar is actually there. Once they do stablecoin legislation, this is going to enable potentially trillions, but definitely billions and tens of billions of dollars to flow into the crypto world and kind of move into other type of investments for building products, building, like I'm going to be doing a separate video on this, but we are talking about Maple Finance in today's video, and traditional finance is investing in the Maple ecosystem, which is DeFi, right? But we also know that World Liberty Finance is investing in the DeFi ecosystems. I'm going to be doing a video on Goldfinch crypto, which is, borrowing, lending, on-chain, collateralized loans, and all of this. World Liberty Finance, what are they investing in? They're investing in the future of decentralized finance, right? Whether it be Tron, Chainlink, Ethereum, Aave, Athena, Ondo, I don't know what Move is, but this is the World Liberty Finance portfolio, right? And so this, even though it's only $80 million, and by the way, let's kind of talk about this for a quick second. And by the way, don't forget to give the video a free thumbs up. Now, World Liberty Finance, when I did a video like just last week or the week before, you guys can see here that the total value of this portfolio was $405 million. And today it's only $80 million. So there's been basically like a, 75% reduction in the value of this, this portfolio. And I don't know why. I don't know why. That's kind of weird. Maybe it was just an accounting error that was on this chart. But yeah, they had way more money in here last time I did reporting on it. Now they have significantly less. So I'm not really sure what that is about at all. But anyway, when I look at the World Liberty Finance portfolio, right, it's decentralized finance protocols that are highly interoperative and also have access to these stable coins because USDC, Tether, these are going to be driving a lot of the money through these ecosystems. This is why I've said for years on this channel, any asset, any crypto, it doesn't have native stablecoin issuance, it's not going to work out. It's not going to work out for them. And that's not me saying it. This is the market saying it. This is the money flows saying it, right? And why do they want stablecoin legislation? Because they want to make sure that everything is legit and secure. And they're going to be starting with Tether. They're going to be starting with USDC, probably Ripple's RLUSD. And so the stablecoins is where they're focused on. Can we make money on stablecoins? Not really, right? So we have to keep that in mind when we're thinking about all of this. It's just speculation, a lot of it. And until we get stablecoin legislation, we're not going to see crypto legislation probably for many years after that. And so understanding that a lot of these moves for the Bitcoin reserve or for legislation, it's just speculation. And so this is how bubbles are formed. This is how people lose sight of the fundamentals. But there are still a lot of fundamentals that are there. As we were just talking about World Liberty Finance, kind of expanding into the world of decentralized finance, Sui Network posted this just the other day. They said, we're excited to announce a partnership with World Liberty Finance, Donald J. Trump-inspired pioneering DeFi protocol rooted in a shared vision for a more open and transparent financial world. As part of this collaboration, World Liberty Finance will include Sui in their strategic token reserve designed to bolster leading Web3 projects. And World Liberty Finance and Sui have begun exploring product development opportunities. So again, like whether you like World Liberty Finance or the president or DeFi or crypto, it doesn't matter whether you like it or not, right? If you understand that they are heavily investing in these protocols: SWI, Tron, Chainlink, Ethereum, Aave, Ondo, decentralized protocols, borrowing, lending, liquidity pools, cross-chain interoperability, all stablecoin integrations. If you understand that that's where the money is flowing, at least in this ecosystem, and obviously we're going to be expanding this conversation outside that just specific ecosystem, as an investor, that's where you put your money, right? Maybe not specifically into these specific protocols, but look at what the larger picture is doing. Bitwise files registration for an Aptos ETF as a number of potential altcoin-based funds are swelling, right? We're hearing about Aptos ETFs, XRP ETFs, Cardano ETFs, Dogecoin ETFs. But as we've talked about on this channel, just because an ETF is launching does not mean it's pro price going up. And it doesn't mean the actual price is going to go up either. And so let's kind of deep dive into this for a quick second. Now, Aptos is a good protocol. Solana, good protocol. Dogecoin, good protocol. Like, these are okay protocols compared to, the other million protocols that are out there, right? And they are in the top. But let's just remember, when Wall Street is in control of the funds and of the liquidity, they can move the market. And they can move it to the upside, and they can also move it to the downside. Now, we're also hearing about Bitwise making their first institutional DeFi allocation. So we have World Liberty Finance moving into DeFi. SWI is getting integrated as well. And now Bitwise has basically allocated $5 million into Maple Finance. So let's understand a little bit more about this. Bitwise Asset Management, which has many different crypto-related products and crypto ETFs. They made their first institutional DeFi allocation, depositing into Maple Finance's over-collateralized Bitcoin loans, according to an announcement on March 6th. Maple did not disclose the size of the investment, but confirmed Bitwise's allocation is represented in Dune Analytics' total value locked figures. Those figures showed a roughly $5 million increase in the TVL between the dates right before this announcement. Bitwise Investments is a testament to the maturity and readiness of on-chain lending infrastructure, according to Maple's CEO. This allocation signals a broader shift in institutional capital moves beyond conventional fixed income towards more efficient and scalable on-chain lending markets. And so, yeah, I mean, we've talked about Goldfinch, we've talked about Maple Finance, we've talked about some of these other DeFi protocols that World Liberty Finance is kind of looking into, but listen, we are in a kind of bull market area, and the market is significantly suppressed since its recent highs in November, December of last year, and so we're kind of due, I think, for a kind of a next leg up. And so even though there's a lot of negativity towards what happened with the strategic reserve, there's also a lot of positives going on, as we just discussed, in the world of lending, borrowing, investing. But let's understand a little bit more about what this executive order calls for. The strategic reserve will contain only Bitcoin, using the 200,000 or so tokens already in the government's possession. David Sachs says that the Treasury Secretary and Commerce Secretary have also been given authorization to explore means of acquiring more Bitcoin through avenues that will not cost the taxpayer. The executive order also mandates a full audit of digital assets currently in the government's possession. The other is a digital asset stockpile containing assets other than Bitcoin, presumably those that the president talked about: XRP, ADA, Ethereum, and Solana, and potentially others. The key difference between the reserve and the stockpile is that the government will not actively look for ways to purchase more of the assets in the stockpile, the altcoins, but it will explore using government funds if they can get budget neutral ways, meaning other ways to get money, right? Whether maybe it's through tariffs, right? Maybe a portion of the tariffs go to, defending this strategic reserve. And David Sachs says the purpose of the stockpile is responsible stewardship of the government's digital assets under the Treasury. And Balaji, who's a big Bitcoin bull, he said this executive order is historic. It focuses primarily on Bitcoin. It costs the US taxpayers nothing, and it saves billions by not selling. And so this kind of goes back to the conversation, right? all of these ecosystems that were jumping up and down when the president tweeted XRP, Solana, and Cardano, and they were like, yeah, Cardano's going to be in the strategic reserve. And it's like, that has to be approved by Congress. But it's not just me who's saying that, right? JPMorgan is saying XRP, Solana, and ADA inclusion in the US crypto reserve would be difficult. Now, keep in mind, I don't necessarily listen to everything JPMorgan says because I don't agree with a lot of their outlook on the markets, especially when it comes to crypto. But here, kind of on their side on this. They said the likelihood of a U.S. strategic reserve gaining approval is below 50%, and tokens like XRP, Solana, and Cardano would likely not be included, according to JPMorgan. They said, quote, "We don't believe an approval of a U.S. strategic crypto reserve is the most likely scenario, assuming congressional approval would be needed. So the chance is less than 50% in our minds." That's the managing director of global strategy at JPMorgan. I wonder how close he is with Jamie Dimon, the CEO. I'm just joking. Anyway, he said, and if a U.S. strategic crypto reserve is eventually approved, it will be difficult to include smaller tokens outside Bitcoin and Ethereum. As we argued in the report, the inclusion of such tokens would raise more concerns about risk and volatility. As we've talked about. I mean, literally, guys, Ripple is selling XRP every month. They have 37 billion coins. Cardano, early insiders, the foundation, right? Where would all this liquidity be coming from to be buying and buying and buying and buying these coins? In my view, XRP, Cardano, and even Solana, these would mimic, if they even got approved, and we're a long way away from that, clearly. And so if it did get approved, it would probably look like Bitwise or Grayscale's asset allocations in their blended funds, which is like Solana's like, I think, 5%, XRP is about 2%, and Cardano is about 1% of the fund. So if the US invested, let's say, $10 billion, 1% of $10 billion is $100 million. 100 million, 1% would be 1 billion. So you guys kind of get the point on that. But it sounds like it's not even going to happen, to be honest, at least anytime soon. Anyway, this report also pointed out similar state-level proposals for Bitcoin reserves that have already failed. We talked about this in previous videos, right? Dennis Porter has been really pushing that the states are going to be the first to have these Bitcoin reserves. And we've seen a lot of potential laws come on to get voted on in these individual states. And they're turning it down. Even Wyoming, which is a crypto-friendly state, they started their own stablecoin project. They even shot down a Bitcoin reserve in Montana, North Dakota, South Dakota, and Wyoming, right? And so JPMorgan report says, in addition, the European Central Bank's criticism of Bitcoin reserves highlight the broader skepticism among policymakers about the adoption of crypto as reserve assets. Eventually, it's going to happen, guys. Like, it's going to happen. Governments own stocks, governments own commodities, governments own property, governments own, they own everything. So they will own these assets eventually. It's just a matter of how long it's going to take to get there, how long it's going to take to see Bitcoin become the global reserve asset, or at least part of the global, the pool of global reserve assets. You know, a lot of people already consider it a global reserve asset, but the people who do, it's a very, very small percent of a very, very small percent of the population of the world, right? So this is going to take a lot of time. We may not even see it in our lifetimes, but just know it is going to happen regardless whether JP Morgan, you or I believe it will or not. And maybe not with these coins. Maybe it's going to be with other coins. Maybe it's going to be with other type of projects, but we're getting there. I mean, we didn't even think that we would ever see private institutions buying crypto, and they are. And they're not only buying, but they're investing into decentralized finance, Maple Finance, Bitwise Investments. They just debuted a Bitcoin Gold ETP, which is similar to an ETF in Europe, right? So these things are expanding, and there's going to be more and more institutional usage and ownership of these coins, of these cryptos. And that comes to the question about, like, let's talk about the price, right? Where are these prices going? Where's the market caps going? And by the way, if you're up to this point in the video, don't forget to give the video a free thumbs up. Also, hit that subscribe button. That way you never miss a new video. We upload as much as possible to keep you on the top of the latest happening. And these are just my opinions. You could disagree with them. That is fine. We could still be friends. But let's kind of talk about the market caps and price. So as you guys know, we are still, like when we're looking at Bitcoin as the general benchmark, Bitcoin is significantly higher than it was in the bear market. Bear market, we were in the $20,000 to $30,000 range for most of the time. So we're either a 4 or 3 to 4x from where we were in the bear market for most of the time, at least. And you know, the sentiment is still moving forward. But again, the market prices that the US government was going to buy Bitcoin, like that's what the market was pricing in. And so when the market didn't get that, the market threw a little tantrum and it came down a little bit. And we are not seeing, you know, we're seeing potentially some concern with El Salvador buying Bitcoin. The market throws a little tantrum. We see MicroStrategy, you know, now selling their stock to then go buy Bitcoin. The market doesn't like that, right? The market doesn't like that the price of MicroStrategy is going down because they're selling more shares onto the market. And the holders are thinking it's because the Bitcoin price is going down, but the Bitcoin price has barely gone down. The price of MicroStrategy is going down because they're selling shares on the market. And so that's a net negative for the stock. And then therefore people become bearish on MicroStrategy, and then people become bearish on Bitcoin. And then people are saying, well, Bitcoin has gone down 12%. So where's MicroStrategy going to continue to go? And it just becomes this like kind of cycle that people just get fearful and then start moving their money out. Same thing we saw with Solana and the drain game with Solana after the meme coin situation. Solana came down, has been down 50% since its all-time record high just a few months ago. Is it going to go lower? Potentially. But this is really just kind of, in my view, the market kind of repricing itself, right? Trying to figure out what fair market value is. And at some points during this time, which could be 6 months or a year of this kind of repricing, you're going to see inflows because people are going to get excited about an announcement, right? Or an integration, or somebody made an investment, and people are going to get excited and start buying into the coin. And that's going to offset the market trying to reprice itself and rebalance. And this is where you see the massive volatility to the upside. And then when you see the massive volatility to the upside, you see people who bought in much, much lower saying, no, I'm pulling my money out right now. And then they pull their money out, and then it becomes an overreaction to the downside where you see the market, right after it jumps up, it goes back down. And at some point you reach an equilibrium and you kind of see a floor building in the charts, right? But we haven't really seen a floor building in the charts recently, right? In a bear market, you see I don't know why the chart's not pulling up, the 5-year, but let's reload and pull. I don't know why it's not coming up. But in a bear market, you see a floor building. And in you see this over here. This is the bear market, right? You kind of see this floor, not too much volatility. And then the market is repricing to the upside, massive volatility to the upside, selling, bringing us massive volatility to the downside. Then people buy down here, massive volatility, until we get back down to kind of a floor. And right now, I think the market is trying to figure out, are we going up or are we going down? And it's not just crypto, it's the global macro markets. But remember, look at the Dixie, which is the dollar index. I think we could actually pull up the Dixie on here. Yes, we can. So I think we can pull up this one. So this is the Dixie, and you can see significant downside here, right? And so we kind of went from June of 2021 all the way up to September of 2022. The dollar started losing or gaining value, right? So what happens? The dollar becomes stronger. When dollar becomes stronger, asset prices typically go down. And that's where you saw, as we were moving into the end of 2021, that was basically the top of the market. And then into 2022 was the bear market. Since then, we've kind of reached a floor, right? We're kind of up and down, but fairly tightly bound into this range of like 103, 104. And so the market is trying to figure it out. Now, if we continue to go down, this could be very, very positive for the price of cryptos. If it goes up, it could be very negative. If there's a lot of volatility, it could also be very negative. because the market is trying to figure it out. And when the market can't figure it out, and even the charts can't figure it out, this is where people just start to sell because they're like, it's probably just better to stay in cash. But again, there will be volatility. And when there's volatility to the upside, people will be selling. Believe me, you're going to see a lot of YouTube channels out here that say, no, we're not selling. We're going to hold forever. Believe it, they are selling their coins. They are definitely selling their coins. And just remember, a lot of people bought in at much lower prices. Some people bought in at $100,000, including MicroStrategy. And so there's people who bought in at $100,000 right now, they can't sell. But if we go back up to 110, maybe they will sell. Then maybe they just want to get out. They're like, this is too volatile for me. Or the person who bought at 10,000 is going to sell at 110,000. And so if you're playing the game of like, let me trade this market, I'm going to try to outpace these guys. There's a lot of people who are bought in at much, much lower prices. So we can still go down 50% and they're still up hundreds or thousands of percents. So focus on your strategy, right? Whatever your thesis of the market is, looking at, the Pelosi tracker, or looking at World Liberty Finance, or looking at what David Sachs and the crypto team are going to be doing based on whatever their announcements were from the crypto summit, which from my understanding, the crypto summit was going to be more of a roundtable to discuss like what's needed, not necessarily to discuss which cryptos are the best crypto. And I think that's why probably we've saw some people get invited and some people not get invited, because the Bitcoin maxis, they definitely have their viewpoint on the rest of the altcoins. And that's that they're all shit coins and nobody should be buying them because they're all going to go to zero. And they may. But right now, it looks like the winners are going to be Bitcoin, and followed up by Ethereum, and everybody else honorable mentions. But this is really what the focus is from a government and company and corporate level at this point. And so investing, in the safe thing, it would probably be here. But one is at record highs and one hasn't even reached record highs. Which one are you buying? Anyway, hopefully you guys enjoyed today's video. Don't forget to give the video a thumbs up, hit that subscribe button, turn on notifications, and I'll see you guys when I see you. Crypto on.